Okay.
Okay, well, welcome. I see Lynn and Heather, you've logged on this morning. Happy Mother's Day to you both, and to Leanne, happy Mother's Day for yesterday. For me, it was a different day. We had one of our sons here, but the other one was stuck in Sydney, not allowed to travel. So, but anyway, it was a lovely day, and I don't think we could fault the sun and the weather, which was superb. But so today we're going to be talking to Leanne again about Leanne of Numbers Count Gerringong. Sorry, Leanne, to introduce you correctly. About an update on the COVID-19 financial measures and what you should be thinking about. And we're also going to talk about your break-even point. And people don't like to talk about, really don't like to talk about a deep dive into their finances, but this is a critical part of knowing how much to charge for your goods and services. And sometimes when it's a service that you're providing to somebody, it's harder to put a price on these types of things. But I won't go any further with that, and hand over to Leanne. And thanks, Leanne.
Yeah. Thank you, Megan, and good morning, everyone. Yeah, we're at an interesting point in the cycle of the COVID shutdown, because obviously we've announced over the weekend that we'll go through stages of moving into potentially reopening, which has lots of consequences for every single person's business. Those who've been shut down, those who have been partially trading, and those who actually changed their style of trading altogether. So I think we've had some interesting stories over the last couple of weeks with some of the local business owners and the methods that they've changed to be able to better look after their client base during this period. And then we have, so it'll be interesting to see how they choose coming out the other side, what their new business may look like. And I think for a number of those businesses, they won't look the same, and they'll choose a different way of trading and dealing with their clientele moving forward. So it'd be interesting to see how that actually works. So our update this week, which is really quite all positive, the JobKeeper money was coming through last week. So I know all of my sole trader clients all got their money by Friday, or the majority of them, sorry. And then the bigger clients who had wages on the JobKeeper program, had employees on JobKeeper program, their money most of them had got their money over the weekend. So they came back to having that in their account this morning, which is a really great turnaround and a positive shift on the back end of that. We're looking like we're coming out the other side. So I think the positivity will start to see flow fairly quickly now. I did have a few clients who were a little dubious as to whether they would get their money and were concerned about the fact they'd paid those wages out to employees, but all is well. A couple of points that we noted concerned a few of our clients and may be relevant to those listening. Achieving the 30% downturn tests was a little bit tricky. Whilst there is guidance around where that doesn't work for you based on that you weren't trading or you had some sort of other situation happening last year, there were a few. We had questions originally. The treasurer actually mentioned that March was going to be the month at which case the downturn would happen and would trigger your movement into JobKeeper. That's actually not turning out to be the way that the tax office is treating that. At this case, it has to be an April downturn. So it's interesting, but if you have any questions about that, please get in contact. We're actually progressing that through with the tax office, because it is not what was ever stated in the Federal Treasurer's initial brief. So we're just seeking some adequate clarification at that point. Now, the JobKeeper for, hold on, I'll just, yes. JobKeeper for sole traders is definitely up and running. So if you don't have that, or you've got an issue, please get in contact with us. We did have a few people contact our office, because what they'd done was they'd gone through step 1 and 2 and not done the final validation on point 3. So make sure that you've done that final step whereby you've given the tax office your April actual figures and your forecasted figures for May. So if you haven't actually done that extra test, there is an extra one, which of course came live last Monday. So it's been the whole journey of this has been step 1, then step 2, and miraculously, now there's a step 3. So it has been a little bit tricky, and I know even in our office, sometimes a little frustrating, because you just think you've gotten to one point with a client or a bunch of clients, and then the tax office seem to still be changing the rules a bit, but they're not. They're just trying to validate their situation. I had another question. The receipts will have been changing. So when you actually record that information and you get the receipt back from the tax office, that receipt has actually differed depending on what days you went in. But please do not concern yourself. As long as you have a receipt number, then your details are valid and you'll still receive the JobKeeper amount. A couple of points that a couple of our clients got caught on, and it is a topic that I think we will discuss over the next couple of weeks. So what happened was that where you've got clients who return a BAS lodgement based on cash sales, now remembering that's the cash that actually goes into the bank. If your business is one whereby you sell to clients and they have a 30-day account, your sales may have been down in April, but your actual cash takings wouldn't have been, because they were based on potentially either your February or March sales. So we had a couple of clients that right at the death knell, of course, didn't make the 30% turnover test for April. So be very, very conscious of that, because the tax office are very conscious of it. So some of those clients, whilst they didn't make then JobKeeper at the last minute in April, we are anticipating that, of course, that they will make it for May, but that will be to then apply, being the first JobKeeper fortnight that we are now in currently. And that is really important, that what you're actually declaring to the tax office are your cash sales, which are the sales that you will be adding to your fourth quarter BAS for the tax office. So be very, very clear of what they are. Another thing is, be very clear if you're selling using PayPal, because PayPal is considered to be part of your sales. So make sure that you're adding that to your figure when you're accumulating your 30% downturn. The things that don't need to be included if you're running a preschool, any of the incentive amounts that you've been paid separately are not income for the purposes of testing for the 30% downturn, nor are the PAYG credits that have been going through for the third quarter BASs that were applied to businesses that pay wages. Some of that, if it's not relevant, please just ignore it. But for those that it is, that is significant when you're classifying, because that PAYG credit that employers were given is actually not going to be included as taxable income. It's not taxable income. It's not reportable income for GST purposes either. So that's a nice little bonus. A couple of further things worth noting, being aware of, that when I say that the PAYG credits are not taxable income, please remember that JobKeeper is. It is meant to be an offset to wages, so the position becomes neutral cash flow and taxable position for you. The money comes in as a taxable income, and the wages that you pay, the $1,500, are obviously a tax deduction, so the net result of that is nil. Just be very, very careful when you're processing in your software or however you report your income to make sure that you are disclosing it up as miscellaneous non-reportable income, so that you get the treatment of that correct when we do your tax returns at the end of the year. And just another point, that neither of those payments and any of the JobKeeper, none of that has any GST relevance. So make sure that you put that on your BAS as not reportable. Please be very, very considerate of your estimates for the tax office when you're putting through your monthly validation for your JobKeeper. Whilst the payments for JobKeeper are guaranteed to September, whilst with this change that was discussed over the last couple of days and announced by the federal and state governments, as we progressively go back into ordinary trading, please be very, very conscious of where the reality is of what your business is doing. At some point in that stage, I would consider that most of us will get back to ordinary trading. Please be realistic about that when you lodge those forecasts. Please don't get caught in the, do I need to talk it down? Do I need to not be putting in sales? Please don't get caught in any of that. The purpose of this is the reporting of those April and May figures currently, and then the May, June, etc. is not that. What they're looking to do is to see how quickly that stimulus package actually worked. I think it is more about should we go into some similar situation in the future. They're looking to see whether the stimulus that they offered actually had and made a difference in small business. So as your business starts to rise from the literally the ashes of the COVID-19, please be really careful monitoring how you're going to rebuild your business out of that. Be very, very conscious that it is going to have a drastic effect on your cash flow, and be very considerate of how that will roll out and enable you to get yourself up to full trading. Again, where I was using the example before is if you have normally have debtors that flow in your cash flow flows in a month or even 60 days after you ordinarily sell, remembering that you will have that lag. If your sales pick up in June, you actually aren't going to receive that money until July or August. When we're ordinarily in our everyday trade, that would just be potentially a less than conscious behaviour about how our cash flow. So please be careful about that. Please sit down and work out how that's going to work for your business and how you're going to be able to regain your stock levels up to their ordinary levels so that you can trade. I had an interesting conversation with a client this morning, and my comment, and I think it's relevant for most, is that cash flow at present will probably be at its most critical, and the only other times you'll have been equal to this would have been when you first established the business, or if you went through a drastic rise in growth spike in your trading and your business. But please try to be really careful about how you're going to do that. I think we'll all get very excited to get open, but there will be some downsides potentially in most people's businesses about how we do that. And I think it's something that we've discussed here every week, is that it is a difficult process to attempt to do these changes always on your own. So if you've got some sort of mentor or somebody that you can talk these things through, or your bookkeeper or your accountant, please do. They are interesting times, and you don't want to think that you've gotten to the stage where you've kept the business and branding alive to only open the doors and find out 30 days later you really are in trouble. So just be very, very careful and wary about that strategy. At this point, has anybody got any questions? I was on JobKeeper or their experiences that they'd like to run a question by me before I move on. It is an interesting experience, and please do remember that once you are on JobKeeper, you are on it till September, which is a great bonus and does allow some really flexible cash flow capacity, but make sure that you understand how that's affecting your business moving into the new stage. It is, I do have to say, it's very exciting to think that everything's starting to be open. I don't know how you all feel about it, but just the idea of going out and sitting in a restaurant and getting all dressed up because I can, and sitting even socially distanced from people is crazily very exciting.
Yeah, I've just got a question for you. What was decided with regard to superannuation payments on the JobKeeper allowance?
Okay, it does vary, but if you are working, if your staff are working and you're paying them JobKeeper, the expectation is that you will pay superannuation for them, at least to the amount that they ordinarily would have had if they continued to earn their normal wages during that period. Now, if you had closed your business, stood your staff all down, and they came back, then that payment to them where they did not work or any top up over and above their ordinary wages does not apply superannuation. So there's a little bit of a leeway on paying that. The interesting one when you superannuation is one point, but the other thing that utilises a calculation out of wages is of course workers' compensation insurance, and it will be interesting to see what avenue the state government takes on that legislation. So we're still to hear on how that'll roll. But does that answer your question, Megan?
Yes, it does. I think one of the queries I think we had before was whether it only has to, you have to only pay it on that the portion above the JobKeeper allowance topped up to the normal amount, or whether you paid on the full amount. So yeah, there was just a lot of grey areas with regard to that one. So yeah.
And if anybody listening has a query, please do look, either contact our office or contact your accountant and actually have that question to make sure that you do get that correct. Most of the softwares, I know we use Xero, and the software is very clear about how the superannuation gets applied. So that's been really, really helpful. I'm assuming MYOB and QuickBooks, the other big softwares, also have a system that works to enable that clarification fairly clearly. It was a little bit of a grey matter in the beginning, but now the tax office have got hold of it. They've been quite clear on it. They've actually passed regulations last week that clearly define what's in and what's out. So today's topic after our update was to talk about break-even point. Now, and this is relevant when we're talking about rebuilding our businesses and going back into full trading. It's really important that we understand what our business costs to shut the door. For some of you, you will have found that out the hard way. So what are those costs, those fixed costs that you pay because you have an arrangement, either for rent, lease costs on equipment or vehicles, also your telephone, your subscriptions on your software, all those things, no matter what you trade or whether you shut your door, as those people who did shut their door will have found out, they keep continuing on. So we were just, the purpose of having a look at this is what sort of sales figure do you actually have to make sure that you can cover those? What is your minimum trade just to cover those necessary fixed costs? And that's often referred to in accounting terms as your break-even point. So I've actually put together a little bit of a profit and loss that I can show you. Oh, no, I lost it. Hold on. No. I had it here clearly ready to go before. Okay, now let's hope. Okay. I think I've got it. All right. Okay, so what we've got here is, got it? So what we've got here, I've just put together a little basic profit and loss for a consulting trading business. Now, so the assumption on this particular profit and loss is that they don't purchase any products and to actually resell, because obviously those would make a very big difference. So where I've gone into there, I just would go through quickly. So the three key points to come up with our break-even point, because we're doing it as a quick process today. The significant one obviously is sales, which you'll see up the top there of 145,561. I've got cost of sales, which in this consulting business is 6,619. Now, just a couple of examples. If I was a florist, my cost of sales in that figure would include my flower purchases, my ribbons, vases for resale, sculpturing wire, and wrapping and packaging. And if I was a motor mechanic, it would include the parts to repair the vehicles and any subcontract work I might need to get people done, get done on cars that are in my workshop. Now, being a consultant, that's very different because what you're doing is actually only providing your services to the marketplace. And the biggest cost of that is actually your time. But I've used in this example, you might have some license fees whereby you actually pay a fee to another business to utilise their franchise costs, which does happen in a lot of consulting firms nowadays. Some of your marketing material may go in there, meeting expenses, and sometimes you'll take another subcontractor or another contractor and get some expertise on board to do that. Sometimes too with consulting, you might even have your training fees up there because they're directly related to the business that you're actually running at the time. Now, I've got a little bit of interest income there in other income. Now, that is the area that if you got PAYG credit income or JobKeeper income, that's where your income would go. But the fixed and operating costs are the costs that effectively don't go anywhere if you shut the door. Now, this is a choice, but we did talk about this. Advertising, bank fees, effectively you still need to lodge your tax return at the end of the year, your bookkeeper, depreciation where you've written off some of your equipment, donations that you may continue, electricity. I've got in there a few little general expenses, insurance. The difficulty is even if you shut the door, you can actually close the insurance down for a little while. But if you've left all your equipment and fittings in there, I wouldn't suggest that's altogether a good idea. Your interest expense, your motor vehicle expenses, if you've taken out a lease on a motor vehicle to run for the year, your other office expenses, keeping it open, your rent, obviously. I'm hoping that everybody that had rental negotiated that with their landlord. That option was put forward by Scott Morrison in the early days of the COVID shutdown. Repairs and maintenance, some subscriptions, your superannuation, basically, if it's your business, and telephone and internet. Now, in this example, you can see our operating costs are about $50,000. So if we shut the door, that's what we're looking at. Now, we can take some of those expenses out of there, obviously, but for this purpose, we're just going to run with that to calculate our break-even point. So if we have a look, and this would be very, very different if you've got stock, because obviously your gross profit is a particularly different situation. So if we have a look here, our gross profit is $138,942, plus our other income, less our operating expenses, has actually given us a profit of $89,451. A nice little situation. But that's based on our sales being $145,000. So what do our sales need to be so that we can break even our $50,000, which is a difficult situation, not one we all want to be in because we're not receiving any profit or return for that. But effectively, that is going to be our percentage of our gross profit cost of sales back against our sales income. Whilst it's a little bit of a mathematical equation, I'll say that the cost of sales there against our sales is only 4.5%. If you're in a manufacturing business, that would be 50%. So the multiple becomes a little bit higher. So our sales need to be higher. But in a consulting situation, you're actually selling your own labour. Whereas in a manufacturing business, you would have staff and you'd be buying products in, and retail, you would be obviously buying things to resell. So in this example, to break even, our cost of sales of 4.5% on sales, we would need to have a sales, end up with a sales figure of, I wrote it down here, $52,000. So at $52,000 with a 4.5% cost of sale, which would be, may or may not be close, but we're using that as a close proximity of what our business does, that would actually give us a net profit. Now, once you've done that, so our point is once you get to 52,000, everything that you earn over and above that 52,000 is going to be your profit and a return on your investment of your time. So if we use this example and our cost of sales was for a retail business, which case I think there's a couple of those in the mix there, ordinarily we would think that our cost of sales would be about 50%. And so therefore, if we, with a 50%, you'd have to have a larger multiple to come up with our sales figure would have to double, and try not to get too, but that basic calculation, and I can send those through to you to have a look, and you can put your figures into these calculations and come up with a what your break-even point needs to be. But in every business, you need to actually have an awareness, because we all need to know at what point we start to make some profit and get some decent return in on our business. So if I go any further, I'm going to make this sound a little bit more complicated than it needs to be. But that is basically our situation about where our break-even needs to sit. And obviously, whenever we incur further expenses and make choices on further expenses, we're going to have to increase our sales figure to actually cover those additional expenses. But being really conscious, and even moving into this stage where you're reopening your business and rebuying stock, and to actually be able to sell your product, that's going to take cash flow into your cost of sales situation quite drastically, and make sure that you're going to have the adequate cash to be able to pay that and the timing of your cash flow. So I think I'll leave it at that point without making it any more complicated. But does anybody online have any questions? It's a little bit trickier on Zoom, isn't it, than when you have a group of people in a room that can ask you questions?
It certainly is. I mean, these sorts of things always bamboozle me anyway, like the financials, and I wonder if everybody else feels the same way, and just
it is a little bit tricky, and I think the point that I really want to make out of this, before you go even setting your selling price for your product, you really need to know what it just costs you to open the door, because they're the figures that you have to actually come up with before you even buy a product and put it into your store and add wages to it and then be able to sell it. So be very, very clear and conscious, because they're what I refer to as the hidden costs, and often they're things that many businesses don't consider when they're actually setting their selling price. And without being able to cover those, then you really need to change your sales price. I do hear, and I'll bring it up now, but I do hear a lot in the Kiama Gerringong area, but that's all I can sell it for. That's the best I can get for that product, or for my hours service, or whatever that offering is. You need to be very careful, because the quality of your service is different to the quality of somebody else's service. Do not undervalue it, and be very, very conscious of what you are worth. Because if you're not getting what you're worth, that becomes more of a challenge of, are you better off going to a wages situation, working for somebody else? Our entrepreneurial outset has to be that we are quality, we are good at what we do, we are giving a service that is over and above, and it's definitely in a consulting arena very much about personality and who likes to work with and what your offering is. So there are other considerations in that really need to be considered. So definitely, if you're concerned about setting your sales price and you don't think that you can get out of the trap of only selling what everybody else is selling at the same price, please put your hand up. There are a few really good business coaches around, but you really need a good business coach to help you work through that, so that you can be confident and comfortable that you're setting your sales price where it needs to look. Is that a little bit clearer, Megan?
Yeah, absolutely. And I mean, you are so right with regard to not underselling yourself, because once you start doing that and chopping prices and cutting this and chopping that, there goes your business model. And yeah, it's very hard to sustain that in the long term, isn't it?
Look, it is very much, and that's where I once worked with a marketing gentleman who used to say that he said most people go broke in their first year, and the reason they go broke in their first year is from exhaustion, not the fact that they're not good at what they do, but we are trying to do too much at a too low a price. So, and then you'll burn out of the market rather than go broke. So I think we all need to be conscious of that. And I do think that that same thing stands very clearly for this new period, in which case we're going into the regrowth out of COVID, because we could all burn out. Because for those of us who continue to trade and trade as best we could with the situation, but very much more hands-on, very much more stress created in our everyday trading, we could all be very guilty of coming out of this quite stressed. So be very, very careful about how you approach the next couple of months as you come out of this, and don't feel the need to hurry. The stimulus that's been given to us by the federal government is allowing you to take your time and be very cautious and considerate about the steps you take as you come out of the quieter trading and the different way that trading's been done over this COVID time. And I'll finish up with that, but I wish everybody the very best over the next month or so as we step out of this post-COVID. And if you have any questions, by all means, please contact me or send me a message. I thank again Megan for these opportunities to speak to you all and keep an update on what's happening, and maybe get you to consider some different options within the confines of your business. But thank you all. And thank you, Megan.
Excellent.
Thank you.
Thanks so much, Leanne, for that. I hope you enjoyed that session. And yeah, it's always a difficult one, but it's something that's essential for your business to actually consider, you know, covering those costs and, you know, focusing on the financial side of things. And if you haven't got the ability or the skill set to actually drill down into those things, you really need to find somebody that does, because it's just critical. So thanks very much for that, Leanne. Just to also remind you that on Wednesday, we have a webinar on how to be an expert in your own industry. Again, we're hosting a webinar with Glenn Hayworth of Resolve Business Coaching. So that particular event is on Wednesday. I've just sent a reminder out for the other events that we're having in May. Next Monday's event with Leanne, I need to change the time. I think we're going to be meeting at 10 rather than 12. So I'll send an amended time out for that, with my apologies. That's my fault. But hopefully we will see you on Wednesday and again next Monday. And thanks very much for that. Thank you, Leanne.
Okay.
Thank you.
Thank you.
Thanks. Bye.